The external environment for China is not very favorable for growth. As you indicated, U.S. is skirting along at kind of low growth, just above zero, depending on your measure. We don't expect a recession in the U.S. this year, although clearly it's a risk. There have been some more positive developments in Europe recently, an exceptionally warm winter, some more progress perhaps than some expected in terms of reducing gas demand without quite as much damage to the economy. And then the potential for Europe, some European economies, for example, Germany, to benefit from a pickup in China. So we think it's now possible Europe could also avoid a full-blown recession, although clearly it will have weak growth. But what does that mean for China? Weak exports mean the domestic economy is even more important. And we see policymakers not just reopening the economy, but also taking measures to support the property sector, ease the regulatory burden a bit, or shift the regulatory tone towards private enterprises, and also keep macro policy relatively supportive. So it's really a combination of things with a significant focus on growth this year, and I think a recognition that the external environment aren't going to help too much.
Andrew, what do you make of this? I mean, what are the global implications here? Because we were discussing this earlier in terms of the propensity to spend in a post-pandemic environment in China. If that propensity is going to be stifled as an indication of high savings rates, then is it really guaranteed that we're going to see this big base effect impact and inflation move higher if commodities are the transmission channel? What are the implications on a global basis of China's reopening?
Well, globally, I mean, you rightly pointed out there's always some uncertainty in terms of how people behave, their risk aversion, how comfortable are they resuming their normal behavior. But we're seeing very significant pickups in measures of mobility, whether that be vehicle traffic on roads, subways, air traffic. It does appear that people are, or a significant fraction of the population is returning to more normal behavior. That in turn should drive more oil demand. We think oil demand could be pushed up by 2 million barrels a day, potentially more, reflecting, again, a normalization of transportation in particular. And that could have material impacts on global oil prices, which is why our commodities team continues to forecast Brent crude oil prices going up to over $100 a barrel later this year. And so that's a spillover to the rest of the world in terms of higher energy prices. Most of Asia, of course, energy importers. That's not as helpful a side effect of China's reopening, but the increased imports and tourism from China's reopening probably will outweigh that drag from oil for most economies in the region.